All right, so this is section 2 of 6 for the QuickBooks Online Payroll Certification Exam. And we're starting off with the hiring process. As we already addressed in section 1, when a new employee is brought in, there are a few steps to the pre-employment process. Once hired, HR will start an employee file where certain information must be verified, recorded, and stored. You will review policies with the new employee and have them sign any necessary documents. In section 1, we looked at hourly employees and salary employees, but there are other ways to get paid. Here are other sources of wages. So these are supplemental and varying in amount, and there may be unconditional ways of getting payments, and that would be commission, which refers to varying compensation paid to an employee after completing a task. Usually it's sales oriented. Bonus and severance pay, we should all know what that is. Sick and paid time off, we should know what that is. And tips, which is gratuity payments made by customers for services provided. All right, so overtime exemption for commission employees. So according to the Department of Labor.gov, if a retail or service employer elects to use the Section 7I overtime exemption, there has to be 3 conditions that must be met. 1, the employee must be employed by a retail or service establishment. 2, the employee's regular rate of pay must exceed 1 1/2 times the applicable minimum wage for every hours worked in that work week in which overtime hours were worked. And 3, more than half of the employee's total earnings in a representative period must consist of commissions. Unless all 3 conditions are met, then that exemption is not applicable. All right, so FLSA says employers must collect and store the following data for each employee. This information can be either recorded on paper or electronically. Only authorized people must have access to these documents. Another document that is important to review with the new employee is a termination policy. This is a written document that details how the termination of employment works inside your organization. It should cover every step of the process so new employees become fully aware of the expectations of the company in the event that the employee wants to voluntarily leave the position, as well as what actions will cause involuntary removal of their position. This policy should be communicated effectively and should not include any discriminatory language. Once the employee has reviewed and understood the policy, it is best practice for them to sign it along with a witness. I talk a little later about the termination process. So you're going to notice a lot of this I'm going to see according to DOL, which is the Department of Labor.gov. So this is the following information that should be in your employee file and should be maintained. They have the employee's full name and social security number, address, including the zip code, birth date, especially if younger than 19, sex and occupation, hours worked each day, total wages paid each work week, rate of pay, all additions to or deductions from the employee's wages, total wages paid each pay period, and date of employment. The next thing you're probably going to go through with your new employee is the employee handbook, which comes in several sections as you see here. You usually walk through it with them and then they sign it. Here are some of the tax forms. I think we talked about this in the section 1 as well. The first one is the I-9, and this is to prove that the employee can legally be employed in the United States. On the back of the I-9, they tell you a list of appropriate documentation that you have to hand in to the employer as proof of employment eligibility. So you can either give one from list A or one from B and one from C. So A normally right away is either the U.S. passport or permanent resident card, alien registration receipt card. B list would be driver's license or any type of federal, state, or local ID. Then C list, I have it, you can stop and record any of this, but C list most commonly uses social security card or birth certificate. The other form that you need to fill out is your W-4, and this informs employers how much tax to withhold from your paycheck based on certain criteria used, and that would be your allowances, your pay period, and your allowances, your pay period, and how much pay you get. Forms needed to be retained. So these are several documents that should be retained by all employers with respect to the business's federal and state filings for a minimum of up to 4 years. So for 4 years, you should have the W-2 forms, the W-3, which is the wages and tax statements, Form 940, we're going to look at all of these in a minute, Form 941, Form 944, and then any of your state filing documents. So employer and employee taxes. Once an employee begins work, he is now added to the company payroll. And then I stop and ask you, did you check out that Excel video? The only thing that's not up to date in that Excel video is they have changed the FUTA. The FUTA tax rate is 6% now. So that's the only thing that's out of date, but everything else is up to date. And I go over the tax rates with you, but that's a good one to kind of get a good feel for the basics and payroll process as well as the taxes. If so, if you did watch it, this should all be reviewed. Again, the only one I have that's outdated is the FUTA. An employee check will show their gross pay, which is wages before taxes and deduction, and then their net pay, which is the actual amount of the check or deposit. There are several types of payroll taxes. Some of these taxes are fully paid by the employer, some of them are fully paid by the employee, and a few are paid equally by both parties. Once collected from the employee, the employer must remit the collected taxes, I should say the collected taxes to state and federal government tax agencies. So they're going to collect the taxes from you. Some of them they have to match, like we know with FICA. And then at some point, whether it's monthly or quarterly, they have to remit those taxes to the state, local, or federal government. So let's look at the first one, FIT. So FIT is the federal income tax. It's a withholding amount determined by marital status, number of claimed allowances, gross pay, and pay period. You'd use either the wage bracket or the percentage formula to calculate it. And then you have SIT, which is the state income tax. It varies by state. And I do want to note, if you go to the training section in the specialty training and you watch the video, the woman there says that there's 8 states without SIT. And that's SIT is state income tax withheld. But that is not true. In 2022 as well as 2021, there are 9 states that do not have state taxes. So on the exam, you're going to put 9. I just noted this for you because when I was watching the training video, I did notice she said 8. So that is no longer, I don't know when she did that video, but that is no longer accurate. So if you take the exam, you're going to put 9. The answer is 9 if you have that question. If the question comes about and it says, well, how many states do not have state tax? The answer is 9. And it's Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, Wyoming, and New Hampshire. I noticed on the video when I listened over, I didn't include Florida. So I'm not exactly sure when that happened. I'm assuming maybe it wasn't at the time of the recording of that video. So again, in your notes, you're going to put 9 states do not charge SIT, state income tax withholding. In 1935, there was a federal law called the Federal Insurance Contribution Act, or we call it FICA, the FICA taxes. And there's 2 under that. There's OASDI, or we just normally call it Social Security. And OASDI stands for Old Age Survivors Disability Insurance. And the other one is HI, or Medicare. And so the Social Security is 12.4%, whereas the employer pays 6.2% and the employee pays 6.2%. And then with the Medicare, it's 2.9%, where the employer pays 1.45% and the employee pays 1.45%. Now let me just note here, something that they don't talk about in the training is if you're a self-employed, like let's say if you're an independent contractor and you don't remit taxes, you would then have to do that on a quarterly basis or a yearly basis. And you would be responsible for the whole entire 12.4% and 2.9% because you wouldn't have an employer to pay the other half. In 2021, the wage cap for OASDI or Social Security was $142,800. That means once an employee meets this threshold, their wages are no longer liable to pay Social Security tax. So what happens if they do? Let's say if they have two jobs and one of them didn't realize that the employee had another job. We talk about that later because there is times where you might pay over in Social Security and there are different ways that you could be reimbursed. There also is an additional Medicare tax paid by employees that make over $200,000, and that rate is at 0.09%. That is called the additional Medicare tax. The next tax is unemployment taxes. So that's FUTA and SUTA. That's the one I, by mistake, have on incorrect on that Excel video. So FUTA taxes are 6%. And there's usually a tax credit given to the state, which is about 5.4%. I put it down here. And then SUTA is dependent on the state. Every state is different. So it all depends on, you know, what the unemployment rate is in that state, the job industries, and so on. So FUTA normally pays administrative costs, and it's not actually the benefits that go to the people who are getting unemployment. The benefits actually come at the state level. So they're the ones that pay benefits to the unemployed person. Thus, they get really the 5.4%. And then I have a side note here, like who usually qualifies for unemployment, like laid off or furlough employees. A furlough is a mandatory temporary leave of absence from your job, which the employee is expected to return to work at another time or be restored a full set of hours. So it could be that you had reduced hours, and that could be due to lack of hours or lack of business, or as we saw with you know, COVID, it could be that we were, you know, under restrictions and we couldn't get to work. So you might have been laid off and or furloughed. For me, I was furloughed. I had gotten less hours for my main job with the school because we were doing it remotely. So I was only teaching about one class. All right, and the last thing that they talk about in the section is workers' compensation insurance that protects employees against losses from I'm just thinking about school. Accidental injury or death while on the job. It's paid by the employer in most states. Insurance is based on a total estimated gross payroll. To determine the amount of the premium to charge, there's several factors that are taken into consideration, like the industry in which the work is performed. So is it warehouse where you're physically working with machinery, or is it you're a teacher and you work at a school? Those are two totally different type of industries. And then the pay scale and the claim history of that particular company. So employee benefits are ways employers compensate their employees on top of the employee's regular pay. There are several benefits a company can provide. This training section covers health, disability, retirement, and fringe benefits. Before we get into employee benefits, just a last note on taxes. I went over the payroll journal entries for both the employee paychecks and deductions, along with the second entry of the employer's liability. So you remember the employer is liable for that 6.2% of the FICA and the 1.45, as well as they are liable for whatever they've taken out of your FIT or SIT, and they need to send that along. And they also have to pay unemployment, correct? So their actual liability, as far as on behalf of what they have to pay as expenses, they have to pay the unemployment, the FUTA, and the SUTA, and they have to pay the other half of your FICA. So that is the second journal entry. I just wanted to take a note. It's something that they don't cover in the training, but I cover in that Excel video. So if you're interested in looking at that, make sure you look at that video. I would have that in your notes because, you know, I think this is something that's going to change as time goes by. I think they're going to constantly be adding to this since it's new, the payroll. So as stated earlier, the employer must remit these taxes on time according to the monthly or quarterly requirements of that taxing agency. If the company does not remit those taxes on time, they will have to pay a penalty fee, maybe even attorney fees if the remittance is extremely late. We'll come back to this topic. Health benefits. So there's a wide range of medical benefits covering medical, dental, and vision. You can look up each of these plans and what they offer, as they may be included in the exam one day. They don't have it in now, but the video in the training section does cover and explain each one of these individually. FMLA, so that's the Family and Medical Leave Act of 1993. So what is it? It provides certain employees with up to 12 weeks of unpaid job protected leave per year. It also requires that their group health benefits must be maintained during that leave. What companies must adhere to this act? Private sector employers with 50 or more employees and 20 or more work weeks in the current or preceding calendar year, or public agency like local, state, or federal government agencies. I'm sorry, including local, state, and federal government agencies, and then regardless of their number of employees. So where we saw the private sector, there was a mandatory 50. When it comes to these, there's regardless of the number of employees. And then the last one is public and private elementary or secondary school. And again, that also is regardless of the number of employees. Who is eligible for this protection? Employees who work for a covered employer, has worked for the employer for at least 12 months, and has at least 1,250 hours of service for that employer during the 12-month period immediately preceding the leave. What does the FMLA allow the leave for? The birth of a son or a daughter, the placement of adoption, a new child, foster care, the care of immediate family member, spouse, child, or parent, to take medical leave when the employee is unable to work because of a serious health condition, or for qualifying emergencies arising out of the fact that the employee's spouse, son, daughter, or parent is on covered active duty. Oh, okay. I know. Okay, so I think that word is eccentric. I don't know how to say it, but I do know what that means. So when you're, called out of your work and you have to go on to active duty. I can't think of what the term is called, but that would be if you're a member of the National Guard, Reserves, or the regular armed forces. I can't think of how you say that word. All right, two notes that I want you to have here in your notes. Employees may take FMLA leave intermittently. So what that means is you might not take 12 weeks in a row. You might take a day here, or you might decide you're going to just have a half a work week. So you can opt for reduced work week if you have a sick mother, let's say, and you want to dedicate more time to her on a daily basis. Another note that I want you to put in is employers must keep the record specified by FMLA regulations for no less than 3 years. So that means at least 3 years. You need to have 3 years of the records specified for any FMLA regulations. All right, so disability benefits. It's pretty self-explanatory here. So they have a table that they had in the training section that you can put your notes in for disability benefits. The next one is retirement benefits. So the Employee Retirement Income Security Act of 1974 is a federal law that sets minimum standards for most voluntarily established retirement and health plans in private industry to provide protection for individuals in these plans. The act covers two types of plans, a defined benefit plan and a defined contribution plan. So here are some that we are going to look at. So you have 401k plans, 403b plans, simple IRAs, and simplified employee pension plans. And I have the definitions here for you. And then I also note that there's a lot on the video on this topic. So I got this from the irs.gov, these definitions, but the video goes over quite a bit of this. So if you want to put more notes in there, I don't believe there's any questions on this at the time that I had submitted. So fringe benefits. So let's look at a couple of the fringe benefits that an employer can offer. Dependency care assistance. So dependency care assistant plan is an employee benefit. By the way, I'm still using this from the IRS, is an employee benefit plan that helps employees pay for care, let's daycare or before and after school care of a qualifying dependent, and that would be defined by the IRS. Then you have cell phone reimbursements. That must be job-related cell phone use. Cash bonuses and gift certificates, those are considered income and need to be added to the employee's gross income. Travel expenses. Now, there are some that are taxable and some non-taxable. I listed the two non-taxables here for you. So the IRS published per diem rates that are non-taxable. So currently that's $59 for a meal, a daily, and $96 for lodging daily. And the example they use in the actual IRS, because I read the whole thing, the IRS it was a train conductor, it was somebody who ended up suing their employer and then set a precedence that yes, these per diem rates should be non-taxable because for your job you might be at a layover and you need to be able to eat and have appropriate lodging. This is the other one. Travel expenses paid or incurred in connection with a temporary work assignment away from home, usually under a year, would be considered a non-taxable living allowance. And then we have housing allowances with a religious organization. It is important to note that any of the following amounts paid to a minister should be included in the minister's Form W-2. Housing allowances should be indicated in box 14 only, and SCCA allowances should be included in box 1. Employer provided vehicles. So this is personal use of auto. You can have this down in your notes. The cents per mile rule, the commuting rule, and the leasing value rule. They don't have any current questions that I have, but you can definitely look this up and have this in your notes for maybe future questions. Meals provided to employees. Meals provided with little value could be excluded from their wages. It's called the de minimis meal, and I talk about it a little later. Actually, have a list of them that would be excluded. Moving expenses. So moving and relocation expenses, per the IRS, all moving and relocation expenses are considered an employee benefit, and these payments are taxable to the employee from 2018 all the way to 2025. So I guess they'll revisit that topic in 2026. But up until then, any moving or relocation expenses that were reimbursed by a company have to be put into that employee's wages. And then transportation and parking. So they do say that some of them fall under qualified transportation benefits. So that would be if it's up to 270 per month. You could exclude it, but if it's over 270, then you have to put it in. And then the same thing with smaller transportation benefits. That shouldn't exceed $21 per month. Educational reimbursement. Employers are allowed to provide up to $5,250 in educational expenses as tax-free fringe benefits to their employees. And then this was what I was saying. We have a list here, and they have it as if you use the photocopier, or if your company provides breakfast, coffee, donuts in the morning, snacks, occasional tickets to entertainment events, or small holiday gifts. Occasional meal money or transportation expense for working overtime, or flowers, fruits, books, or any of those type of small gifts, those would not be considered wages. So voluntary deductions. So the two different voluntary deductions that they go over are we have the mandatory, which we already went through, and then the voluntary, which we went over too. The pre-tax deductions would be taken from the employee's gross pay before any taxes are withheld. So this would be like your Roth. Oh, no, I'm sorry. Your Roth would be post. The Roth would be post. Your pre would be your 401k because that you're going to pay taxes later. With your Roth, you pay it up front. Your group term life insurance or medical and dental benefits, you don't get taxed on those. So they take those out first and then they take taxes out. Then the post-tax would be any wage garnishment. We'll talk about those in a second. Your Roth IRA, because you pay your taxes up front on that, and then any union dues. So voluntary deductions, we discussed several voluntary employee benefits that will be deducted, like health, disability, retirement, union, etc. But before deductions are taken, the employee should sign some form that will be kept in the employee file. A payroll deduction authorization form is a written agreement where the employee acknowledges that there will be voluntarily allowing the wages to be deducted for the specific benefits they signed up for. These forms should be very clear and specific to avoid any misunderstanding. So involuntary deduction, this is where you're being garnished. Your wages are being garnished. And the three examples are income taxes, so you owe the federal, state, or local income taxes, or any FICA taxes. Then you have student loan garnishments, so you're not making your loan payments, or child support orders. Those are three types of involuntary deductions. The payroll department must be aware of the limitations to garnishment. The maximum amount allowed for garnishment cannot exceed the lesser of the following two: 25% of the employee's disposable earnings, or an employee disposable earning less than, so the disposable earning minus 30 times the federal minimum wage, which currently is $7.25. Payroll requirements include accurate reporting, proper record keeping, and tax withholding. New hires must fill out proper, and I do have that as file. Fill out proper forms, and employment eligibility needs to be verified. Employees must be paid on time, and your company must adhere to the wage and hour laws. All wage garnishments must be done accurately and sent out to the proper agencies. Payroll staff must be very familiar with the federal, state, and local laws governing the payroll requirements. Employers must deposit federal income tax withheld and both the employer and the employee's Social Security and Medicare taxes. So there are two deposit schedules. You're either a monthly depositor or a semi-weekly depositor, and that also determines which forms you fill out. In addition, employers must deposit the FUTA for any quarter in which the tax due exceeds $500. The tax must be deposited by the end of the month following the end of the quarter. Employers must use electronic funds transfer to make all federal deposits. Per the IRS, employers must report wages, tips, and all other compensation paid to an employee by filing the following forms. So the only one, we're going to go over each one individually, but the only one that you see a little note here is the Form 944, and that says total annual liability is less than $1,000. I'll go over that again in a second. So the first one is File 941. So that's your employer's quarterly federal tax return. So this form is filled out and submitted. This is where you put in, if you're like a mid-sized business, and you put in what your quarterly payments were. So this is, you're filling out quarterly payments. Now, you would have to submit a Schedule B if you actually had semi-weekly payments. So this form is filled out and submitted with Form 941 if the employer used the semi-weekly deposit schedule, and if you reported more than $50,000 of employment taxes in the look-back period, or accumulated a tax liability of $100,000 or more on any given day in the current or prior calendar year. So yeah, I think I have a note here. So going back to that video that I said, I saw that one error with the 8 states. I found another error, and so I'm going to leave this up to you completely. And I'm also going to challenge you, like, please look it up yourself. Don't just take my word for it. But so I have here, irsgov.gov says, if you enter your tax liabilities in the spaces, talking about the Schedule C. So the Schedule C is if you're a semi-weekly payer, okay? And you're putting them down here, how much you paid. In the video, she says that you're actually going to be putting the amounts that are accrued and not the ones that you paid. But I'm saying to you, I thoroughly looked over the irs.gov. And the reason why I'm doing that is because I've noticed I take the questions that are sent to me, and I've just been doing my videos and putting them. But the last one I put, I guess somebody was challenging, like, I don't know if this, or even not just saying if it was correct or incorrect. I was also noticing there's 2 or 3 questions where they asked for more than one answer, and I only had one of the answers. I don't know what the other ones were. I just see what was submitted to me, and I checked it like, oh, that's correct. But yeah, that one is correct. There was maybe 1 or 2 or 3 more factors that needed to be added to that question. So now I decided I'm going to go ahead and start looking into the answer. And when I watched the training video, I saw that it said, again, that the liability here is not what's paid, but what's accrued. And I'm telling you that if you go to the IRS website, the irs.gov, and you look up 941 schedule will be. It's going to say to you that these spaces correspond to the dates you paid the wages to your employees, not the date the payrolls were accrued. So that's what the IRS says. However, the training video says the opposite. So I'm not sure what you want to do if you get this question. I'm not sure if there is a question, but if there's a question and it's addressing this, I don't know how you want to answer it. Me, I would answer it the correct way. It's saying that you're corresponding to the dates that the employees were paid. That's what it says on the irs.gov. So just want to let you know about that fact. And I would like you to also double check that. If I'm wrong, put it in the comments. But I looked it up and I read it, and it just disagrees with what the video says. The next one is Form 944, and this form is for small businesses whose their tax liability never gets to 1,000 or more. So they actually just going to remit their taxes at the end of the year, and they're gonna do. It's like a 1040 easy. It's nice and simple because you're only remitting, you're making the one payment. Our Form 940, that is your FUTA tax rate, which is 6% on the first 7,000 for each of your employees. If the FUTA tax liability is 500 or less, you just skip that quarter, you go to the next one until you reach the 500, and that's when you make your payment. Your training section does go over this. It's correct, so I would go into that video and look further on the 940. And then you have your W-2, and that's shows your wages and tip incomes in boxes 1, 3, 5, and 7. Just note, reported tip income is subject to the same taxes as regular wages, and you would also see it in boxes 1, 3, 5, and 7. I believe it's 8 for anything that you didn't report. So let's say, in your last week of employment, you didn't get to report your tips, you have to add that in. Or if something, got one out of the time period you were working and you want to report that, you would report that on line 8. So let's see, and the employer must match the employee's paid Social Security and Medicare taxes. So that's for tips. So for tips employees, they're going to get Social Security and Medicare taxes. The training section goes more in depth on this topic, so go ahead and go into that. And W-3 is the transmittal of wages and tax statements. It's a tax form used by employers to report combined employee income to the IRS and the Social Security Administration. Termination. So taking the proper steps when terminating an employee is an important business tool because no business wants an employee to turn around and sue them for discrimination or apply for unemployment when they were rightfully dismissed. So I got this section right here from CompletePayrollSolutions.com. What should you have ready when terminating an employee? Your final check, your COBRA information to give the employee if they want to continue with medical coverage, severance pay, because you have to pay that if they're due it, and benefit information, so like maybe sick or vacation time or life insurance information they might need. In the absence of an employee contract, the employment at will doctrine, and that what we call them as at will states. So Pennsylvania, where I work, is an at will state. So that allows an employer to terminate an employee for any reason or no reason at all without notice, as long as it's not discriminatory. So meaning, you cannot fire someone for having a disability if you hired them and you knew they had a disability, or for race or sex, gender, religion, or temporary medical condition like a pregnancy or an illness with a medical excuse. So you can't fire for them for any of those, but you can fire them for, being late or being rude to customers or anything that, falls under inappropriate work behavior. Note, in the training section, advanced options in QBO Payroll. So this is not in that specialty. That's where you go to the regular training. They go over the 6 steps of creating the final paycheck. So have that in your notes. I felt that was a little bit too tedious for me to go over. It's going on, continuing with termination. When an employee is terminated, they're eligible for COBRA medical insurance. The table here shows examples of termination, ends of employment, and the time allowed. So basically, it's just going to tell you if you got fired or if you're let go, laid off, furloughed, or if you willingly quit, or here if you got fired, you're going to get 18 months of COBRA. All other ones, like if you were divorced or you're a child, like, so most states will allow you to have medical, or most medical insurance will allow you to have it up to your children turn 25. As soon as that child turns 26, they're allocated to 36 months of COBRA. Or the death. If you have a death of an employee, their spouse or children that are on the plan have 36 months. All right, continuing with the termination. After creating the employee's final paycheck, update their status to remove them from the active employee list. So you'd go to Payroll, and then you go to Employee tab, locate that specific employee, make them inactive. Then search for the Employment section, and then click on the pencil icon to edit. Change the employee status from active to not on payroll or terminated, and then select Done. Terminated employees no longer appear on an active payroll list. However, their profile and pay records will remain in account because, of course, you need to still see them on reports, and it still counts for that year. Note, if there aren't any paychecks created or pay history added for an employee, delete their profile from the QBO payroll. And also note, remote employees are generally subject to the laws of the city or state where they physically are located and perform work, not the state in which the company is. So this was actually a topic for the last 2 years, because a lot of people were working remotely from their houses. So you might live in one state, like me. I live in New Jersey, but I work in Pennsylvania. So in general, they're saying remote employees are subject to the laws of the city and state where they physically are located and performing the work, and not the state that they're working for. Of course, when they go back to work, then they're back to wherever they're working. So here are some of the questions that you may come across. You're going to want to put all of these in your notes. What is a furloughed employee? An employee who has been temporarily let go, or an employee whose work week has been reduced because of, let's say, decreased sales of a product. So they'll be reduced, their work week is reduced for some reason, pertaining to less products being sold or business not doing good. Second question, the Family and Medical Leave Act, FMLA, requires employers to keep employees' records for a minimum of how many years? 3 years. What is protected leave under the FML regulation? What isn't? So have both of these in your notes. What's protected? The birth or adoption of a child, the care of a sick family member, and I put etc. because I have them all listed in an earlier slide. Not protected, vacation. So if you want a vacation, no. You were caught, you're going to possibly be fired or sued, because you can't use FMLA to go on vacation. Or a child that has a cold and the school calls. If that child doesn't have a main illness that you already established FMLA of, you cannot use that. Or bereavement. If you had a death of a family member and this was all of a sudden, that's not under FMLA. So bereavement does not count. Fourth question, what is grounds for termination at an at-will state? An employer can terminate for a non-discriminatory reason, like unacceptable behavior. So let's say excessive tardiness, or being aggressive, or being insubordinate in the workplace. Those are examples of being able to get terminated at an at-will state. Which state laws should be considered when terminating a remote employee? The state laws where the employee resides. What is the purpose of Form W-4? To let the employer know how much tax, which is actually FIT, to withhold from the employee's paycheck. What two documents are required for a new employee? The I-9 and the W-4. What two statements about sick pay can you find in the Department of Labor site? Sick pay policy must be written and communicated to your employees, and sick pay policy must be non-discriminatory. To use this Section 7I overtime exemption for commissioned employees, what 3 conditions must be met? The employee must be employed by a retail or service establishment. The employee's regular rate of pay must exceed 1 1/2 times the applicable minimum wage for every hour worked in a work week in which overtime hours are worked. And 3, more than half of the employee's total earnings in a representative period must be consistent of commissions. What is true about taxes when a company covers the moving expenses of an employee? Those moving expenses are considered taxable income to the employee, until what, 2025, it said. So those moving expenses are considered taxable income to that employee. Which does and doesn't qualify for the de minimis fringe benefit? Does breakfast, snacks, lunch, dinner, picnics, anything that's like really basically food related and it's for everybody, that's not considered wages. But what does not? Moving expenses, cash bonuses, legal fees, or counseling fees. So anytime that your company pays for a lawyer, any type of legal fees or counseling fees, financial counseling or medical, mental counseling fees, and you ask for reimbursement, that would be considered income. How many states do not have state income tax applied? That's 9. I listed them up earlier. If an employer exceeded the Social Security tax amount after you've reached the annual limit, what option is correct? So I have 2. So if you have one employer, so if they gave you a question like this and you had one employer, you would just ask the employer to refund the overage because they're the one that overcharged you. So they can just simply give you the money back and deduct it from their payment. But if you have more than one employer, so you have 2 employers, so they're both liable, then the employee would not ask their employer, and they would take a credit on their 1040 for that overage. They would get a credit for that. If an employee is terminated, how long are they entitled for COBRA? So if they're terminated, it's 18 months. I showed you that chart. What is the purpose for the Form I-9? To verify an employee's identity and eligibility to be hired in the United States. Which information is and is not required to be maintained in an employee's permanent file? So I have them all listed up there in the beginning. Is name and social security number, rate of pay, address, birth date. I have a bunch of them listed, so I put listed there. Is not religion, height, marital status. Those are not there. What is the tax rate for FUTA, federal unemployment tax rate? That's 6%. With regard to employees' reported tips, what must an employer do? They must report the tips as wages on their Form W-2 and remit the employer-employee portion of Social Security and Medicare taxes. If you receive educational assistance benefit from your employer under an educational assistance program, how much can be excluded from income? That's $5,250. What taxes are required to be withheld from an employee's paycheck? Now I'm going to tell you what they're going to have as an answer. Social Security and Medicare and federal and state withholding. But I do want to say they're incorrect here because I work in Pennsylvania. And in Pennsylvania, they do require that the employee pay a portion toward unemployment. So they actually have one of those answers there that has unemployment. And I guess their assumption is that no employees pay, but that's not true. I don't know how many states there are. There are very few, but Pennsylvania is one. So if anybody's watching from QuickBooks into it, they're actually wrong on that question. But yeah, the answer would be Social Security, Medicare, and federal and state withholding for the majority of the United States. There are a handful of states that do ask the employee to pay toward unemployment. But don't put that, okay? Put Social Security and Medicare and federal and state withholding. All right, what group of employees is unemployment insurance most provided for if you're laid off or furloughed? Those are the ones that are automatically going to get unemployment. What 2 options are acceptable documents for proof of the Form I-9? That is the U.S. passport. Remember that was Section A. And then you would need one from Section B and C. So that would be like driver's license and Social Security card. Which wages types is not considered regular wages? So non-regular wages would be commissions, severance, bonus, sick time, and tips. Have all of those in your notes because you don't know which one they'll have there. What are examples of non-taxable travel reimbursement? Issuing a living expense based on the amount of time traveled. So that would be like that example. Well, I didn't give that example, but it would be an example of, let's say you opened up a new office, your company office opened up a new office, and they sent you out there to like help them get started. And you were there for under a year. So that would be a living expense. That's the key though, under a year. The other one is employees can get paid based on IRS published per diem rates. That was the one that I had said. It was like a train conductor and he was getting dinner and staying at a hotel and he wanted to be reimbursed by his company, which did. And then they put it as wages and he fought it and won. So that Those published per diem rates are, hotel and food expenses for traveling. And there's a cap, and I put it on there on the particular slide we covered. An owner has been an employee. Oh, so this question, I went over this in section 1, so you're not going to see this in this particular video. An owner has been an employee for many years with his S Corp, and he plans to take out $200,000 out of the business, which includes $50,000 in distributions. What is non-taxable? Well, the $50,000, because he could take out tax-free non-dividend distributions. The little side note is unless the distribution exceeds his shareholder stock basis, which is very unlikely in this example because he's taken that much out and he's been in business for many, many years. And this last one, let's say a company has hired a new employee. What 2 options are employer paid taxes, federal and state unemployment, and Social Security and Medicare? All right, that concludes it. So add anything that I didn't go over in the comments and let me know how you did. Thank you.